Hello everyone, I'm Ali Mortazavi and welcome to today's webinar where we will explore some advanced tips for trading on the TradingView platform integrated with Errante. And this is a practical session, so I encourage you to follow along. And we're going to cover everything from setting up TradingView, exploring advanced indicator, and using risk management tools, things that will make your trading more efficient and also informed. So just before we begin, please note that the content of this webinar should not be construed as investment advice of any kind, and the strategies information provided are for educational purposes only and should not be considered as a recommendation to trade. So without any further ado, let's dive into our exciting content today. I'm going to start from the scratch with the TradingView platform. So to get us started, let's connect your CTrader account with TradingView. And TradingView, look to the upper right corner where you can make sure that you are connected with your account. And then you see TradingView is not just a trading platform, it's the ecosystem of all information you might need for trading. Consists of super charts, screeners, calendars. One of the most, let's say, common ways to get through the trading straightforward is using super charts, which redirects you toward charting or the own platform it is. And then through this panel down the chart, you see the trading panel, and here you can find the broker. If you can't see it here, it doesn't matter, just click here and you will be able to find Errante here. And then depends on the type of account you have. It first mentioned that Errante's TradingView platform is connected to CTrader, so you can connect it to any CTrader account you have at Errante. Here it can be live or demo. With demo, you can just click on connect and then choose the domain that you are using based on your region, and then you just need to enter your credentials for Errante login, and then you see it's powered by CTrader. It means the account that you created at the first place can get connected with on CTrader, can get connected on TradingView as well, and then you just need to approve access. And here you go, you have your account connected to this. And by doing that, to make sure you can see first this green circle here, which means that the market is open and is tradable, let's say. And also you can have all the details of your account here down in this section, like account balance, margin, free margin, and so on. So before you start trading, always confirm your leverage settings to avoid any surprises when managing your positions. And to get that, when you get to trade section, you can see your leverage here, and we will just get to this in more details a bit later. So before opening any positions, you need to set the stage by analyzing the market. So let's go through this together. First, open the economic calendar from the more menu here on the right side down. You see this calendars icon, so you can click on it and you can get access to all the important events of the day. So visually, it visually shows what is happening right now in the market. So you're able to filter the events by currency pairs or asset classes. For example, here we have access to sort them by to different categories, like economic events, like earnings, like revenue, like dividends. Depends on if you are interested in trading forex products, or you want just to trade indices or any CFD shares with Errante. And here you can, it's not very, let's say, advanced calendar, but it has some very practical features that I'm going to explain. First of all, you can only high important, click on only high importance events. So you will filter some noises into market, and then you can just review what is going on as the important, as the most important events. For example, we have tomorrow, Tuesday, October 22, the ECB President Lagarde speech. And if you click down, you can get access to much more details. That is very good to keep up with your fundamental knowledge if you really interested in understanding how the market functions. So you can just read this stuff here, and it's going to be a very good tutor for you. And also you have the ability to launch the chart, and by that you see just you need to change it to daily. From the daily and beyond is available, and now you have the data from the 1999. This is a very this is one of the let's say stages of excellence with TradingView platform. As you see, you can get access to all the historical data from 2000 to now, which is impressive. And also you can change now the display in chart display. You can change it to anything you want. For example, I can column or line charts, and also you can apply any indicator you like on the chart. So you'll be able to review the data, to read them, to follow up the trend, and to see how it's going on with market changes. And this is something which is really, really useful when it comes to TradingView calendar. And you also have the ability to apply any of these. You can read these. And one interesting feature to me is that you can get access to the source of the event here, to source of the data here. If you want to scrutinize the let's say the whole report, you can get access to the very reliable source here, which is as a reference, and you can use these sources for your further study and fundamental analysis, or what's going on with the market, to keep up with changes and to keep yourself updated. So this is the first part, using the calendar. And of course, I explained in our previous webinars that you have access to the list of trading instruments here. However, I taught how you can make your own list with all Errante's instruments. So you easily just need to click on them. Let me change it back to candlestick, which are our favorites. And through the setting, I told you how you can control all of your appearances. For example, if you want your positions to be shown or not, or your orders as well, you can just tick it on or off, and that's it. And for example, here you see in the trading, the executions. If I turn it off, you see those arrows disappear from my screen. So in that case, I can keep it very neat and simple, and maybe I can have more focus on charting itself. So the next thing I'm gonna explain is, in this section, I want to cover 5 advanced or less commonly used but highly effective indicators, and these will help you identify market trends, momentum, volatility, and price direction with greater precision. We'll walk through how to add these indicators to your chart and how to interpret their signals for practical tradings. First, let's start with Keltner channels. Go to indicator here. This is an indicator panel, and in the search bar also you can just easily type Keltner, And you see here is the channel strategy and use the channel. This is a Pioneer script in a very basic terms, so it's not recommended to use them solely, but you have the default common indicator as well here, which is more solid, I guess, and more reliable. So here you can apply the Keltner channel. What is Keltner channel? Keltner channel or volatility based bands that help identify overbought and oversold conditions, something like Bollinger's bonds, but unlike Bollinger bands, which use a standard deviation, Keltner channels use the average through range or ATR. So when the price hits the upper band, for example, we get out of it, it signals potential overbought conditions, and when it hits the lower band, it signals oversold conditions, or in some market condition, it let's say signals the very strong momentum into market. However, if you see you have a KC indicator here, the credentials, this is the initials for Keltner channel, and then you can click on the setting to set the length. The multiplier can be 1 ATR, 2 ATR, and more based on your strategy or customization. And then you can set also how you like the bands aside, average true range, or only the range. So you see, it's a very flexible indicator here. And then you, and we know we use the ATR as the average true range to let's say measure the volatility in the market. So in that case, most of the strategies are applied with Bollinger Bands you can use here. But here I have the Bollinger Bands as well. If you apply Bollinger Bands, you see Bollinger Bands are more, let's say, volatile than Keltner. So Keltner, we can say, is filtering some noises compared to Bollinger Bands. For example, here you see when the market is getting to a new direction, we have the, let's say, upper and lower bands all in one direction with no divergence or something like that. That it's very usual with Bollinger Bands, because that has a very different interpretation when it comes to trade with Bollinger Bands, because we are going to measure both momentum and also volatility and direction of the market using Bollinger Bands. But here with Keltner, we are focusing on market volatility. And then when the market hits the upper band, it means it's above the 2 times of its ATR, and it's very likely to see things will come down a bit. So in that case, we can expect the upper band to act as, let's say, a resistance level, and vice versa with the lower band here. So this is a Keltner, which can be very useful for our trading. Use Keltner channels in conjunction with the trend following indicators like moving averages, because if the price breaks above the upper band during a strong uptrend, it can signal a continuation rather than a reversal, and it's a very important point. Similarly, during a downtrend, touching the lower band might suggest further downside momentum. So it's very important to keep it always in use with other incorporate it with other trading indicators. For example, I have RSI here to gauge the market momentum as well, to see if both of them, like the RSI is in oversold condition right now, and the price is below the lower band of the Keltner band, let's say, we can consider it as a strong support level, and maybe we can expect the price to pause this downtrend a bit here. However, we really can also incorporate the multi-timeframe analysis here to see what's going on in lower or higher time frames. For example, here you see after making this lower bottom here. Now the market made the higher low here, and now we have been in some price increase during past 3 hours. So that's a case that we can maybe encounter incorporate the RSI with the Keltner bands. And the next indicator, these indicators are one of the, let's say, the most important advantages of TradingView. It's a very vital advantage of TradingView, because in other platforms, you really need to be a programmer or something, or you need to be a market, let's say, a pro to get access to these things, and you always need to buy them and outsource them from the third party, and then download them, and maybe there is no built-in indicator in, for example, like this in MetaTrader 5, 4, or other trading platform. But here with TradingView, you can access to all of these pro indicators without any necessary knowledge of let's say programming, or you don't need to do anything. These things are all built in the platform. And one of the let's say another one that I'm going to introduce is volume weighted average price, let's say WAP. Moving averages are very, very useful, very simple, very reliable tools when it comes to analyze the market trend. And and we know that the volume also is a very important course of confirmation in stock trading. However, we have only the tick price in forex trading and CFDs because of the decentralized nature of forex trading. However, here you can combine both together to vital part of trading, volume and direction, or moving averages, and that's how it comes to VWAP, because VWAP is the average price of an asset weighted by volume or a specific time period, and it's often used by institutional traders in some different levels, however, but the basic concept is the same to determine the market's fair value. So when the price is above, let me just hide the KC, and now here you can see we have a VWAP indicator appeared on the chart. So I was saying, when the price is above the VWAP line, it indicates bullish momentum, and while trading below the VWAP suggests bearish sentiment in the market. So this is one thing you can, if you just click on the setting here, you can again set the anchor period as a session. It means synced to your time frame, or you can use a predefined one like a weekly, monthly, quarterly, and etc. And then you can just change the source to be the median price, or you can set it on a close price something. And band setting, you can change it, of course, with a standard deviation as a percentage, or and you can set a multiplier for each of them. For example, the band multiplier for the first band is 1, and the second band is 2, and the third band is 3. It means it's gonna multiply. It's gonna multiply the your volume weighted averages with these multipliers, and then you see how it shifts through different lines here. And then you can have it in a different time frames as well, but it's better to keep it synced with your current time frame as you see the price chart. So then and rest is the appearances and the visibility on different time frames, which you can figure it out yourself. However, purity what is the advanced tip here? The VWAP is particularly effective for intraday trading. So use it alongside shorter time frames like 15 minutes or 1 hour charts to enter positions when the price returns to VWAP after a strong breakout. And this serves as a potential re-entry point during trends. This is one of the most, let's say, common strategies using VWAP. For example, here you see when if I show my 100-day moving average here, you see after this sharp decline in the market, we went some range and then we hit the 100-day moving average, and also we hit, so we can understand that this is a downtrend because the price is below the 100 moving average. And then after that we see we also hit the upper band of the VWAP, and then we get to the downside, which means it is a signal of continuation of these of a new downtrend in the market again after this range. And also we can come up with other confirmation from the price chart, like let's say you can consider this somehow range here. Look at this middle band here. It's a one way, or in better way we can just let's say, yeah, draw something like this. Yeah, okay, it's a very beautiful channel here, and then breaking below this channel and coming back from the 100 moving average, and it can be all different kind of confirmation we really need. And also one of the most important one is breaking below this market bottom here in conjunction with this the lower band of this ascending channel here. And then we hit, you see, this is our strategy. We hit or we rebound to this broken area as a broken support area, which has become a resistance area, and then we resume the downtrend. So this is a very good point to enter the market somehow using the VWAP to confirm the breakout and also confirm the rebound to let's say of these let's say price pattern. So far so good. That's great. Okay, let's continue with the next one, which is a super trend indicator. Super trend indicator is also another very useful tool here. Okay, what is super trend indicator? It's a trend following tool that provides buy and sell signals based on price action and volatility. So you see, we are focusing on volatility, which is a more advanced topic in trading. It's not just the technical analysis focusing on price charts, but also if you are interested in short-term trading or trading on short time frames, it means you really need to understand the market momentum, let's say at this snap, because it's really essential for all traders to keep up with market changes, which is almost very quick usually, yeah, and the volatility and market momentum playing a very key role here. So a green line, when you apply the super trend indicator on your chart, again, you can just get through the setting here to see what is it, what's that. First, you have ATR length. So you have changed the ATR. It's better to keep it as default as it is. And then you have this factor and calculation time frame, which it's better to keep it synced with your chart, and then you can just apply it on your chart, and you see it consists of some green and some red lines. So let's see how to interpret and understand it. A green line signals a buy, while a red line signals a sell, and it's useful for identifying clear market trends without excessive noises. How it comes? Because during the market uptrend, you see the super trend indicator comes in green. For example, when we have a when the market is stopped forming lower lows and lower highs, we see it turn to green. It turns to green, so it means it's the first indication of market reversal somehow. Then you can incorporate it with some candlestick patterns, and also you can look at the price chart, and also you can get more confirmation from the RSI when you see we have a higher bottom here, and then while the market is below this 100 moving average, means we can expect a correction in the price. However, then we see at this breakout bullish Marabuza candle, I see here toward the 100 moving average, we see the RSI is getting out of the neutral zone to the buying zone. So it's another indication of changing or shifting the market momentum from bearish to bullish. So it can give us a good opportunity to buy. And then if you wait to pull back to the lower levels, maybe like this, and then as we can see this market break out above the last market top, it can confirm a new uptrend for us, as we see based on books. Yeah, we see a one higher top and one higher bottom here. So a break above this market top can be confirmed by the momentum oscillators, and also the moving average, and also the super trend, which you see it gave us a very early signal, and that's the benefit of using super trend indicator on the chart. So we have the same story here with the red line. You see, for example, market has formed a double top here, and then we see a turn into super trend indicator turn red when the market got below this resistance. This support level here is the last market bottom. So and just crossed below the 100 moving average, and this is another form of trading with this indicator. At the same time, we can confirm it with RSI falling below 50. And maybe you have another favorite, let's say, momentum oscillator like MACD. You can also confirm with it. But if you want my recommendation, I prefer RSI because it always neat and simple. So, and it has a better indication for us, and also it reveals it comes directly from the price, not from the moving averages, which are related to price, but that's a second hand, let's say, calculation that can make more delay in market let's say analysis, and all, of course, our decision-making process. So this is a very useful one. So combine super trends within momentum oscillators like RSI to filter out false signals. It's very important. For example, when super trend signals a buy, but RSI is overbought, so wait for a pullback before entering the trade. And I really recommend you to explore these indicators on your own TradingView, and then find the signals that don't or didn't work. Yeah, that would be better. For example, and there might be a lot of different, or let's say, false signals. In that case, you will be able to understand the limitation of the indicators you are using, because there is no holy grail in technical analysis for sure, and it's all about the market psychology. So you really need to get to practice in the best way. And one of the very let's say funny benefits of super trend indicator is that it can gives you somehow a very early signal, and then you can use it for confirmation as well. For example, if you are you want to rely on chart pattern, something like that, you can use super trend indicator to confirm when you can picture a market reversal somehow. For example, you can see it's a range bound intermarket, and all of a sudden we have a very nice breakdown, and then you see the super trend indicator is red, so it can be used as another or further confirmation for you. And also you see the RSI is in selling area, so that's it. So breaking below, so it's very useful for breakout strategies, especially at spotting the reversals. So another one which most of you might know is average directional index, or ADX. With that's it comes with very good features on TradingView. Again, you can just search it in your indicator box, and average directional index, you can apply it on your chart. I'm going to hide the other indicators to prevent any confusion on the chart, and let me just make my chart a bit clean and then show you how to use it. So here's the ADX. Yep. And through this setting, you can set the smoothing and the DI length and the time frame. And you see, unlike the, let's say, MetaTrader, this comes the ADX there comes with 3 different lines, plus DI, minus DI, or negative DI somehow, and also the ADX line itself. Here we have only one line. By the way, we know that ADX mirrors the strength of a trend, while the directional index components like DI plus and DI minus indicate trend direction. So an ADX value above 25 suggests a strong trend, while below 20 suggests weak or sideways movement. So it's very imperative to understand that the direction of the ADX itself doesn't have anything to do with the market direction. So you really need to prevent such a confusion, your misunderstanding from the ADX. So it has nothing to do with market trend, okay, market direction. It just shows the strength of the momentum of the prior trend in the market. For example, when you see the market is starting a new downtrend here, this is a Euro USD 1 hour chart, and you see I have the ADX above 25, and this is a good indication of let's say accelerating momentum in the market. But you see, as ADX is rising, however, the market is falling, so it doesn't have any directional signal in it itself. But what can give us some insights on let's say market direction is the components of ADX, which are DI plus and DI minus, or positive and negative DIs. However, you can see we don't have this DIs, but you know, from the community of TradingView, which is a library of let's say indicators, you can find another ADX with DI. However, you have to make sure these are have let's say right formula using it. However, here you can see as a ADX and DI from the community, not the inbuilt indicators. You can see we have the ADX with the DI, positive DI and negative DI. So ADX works best in trading markets. So use it to confirm the strength of trends identified by other indicators like super trend or VWAP. So not in this session, but of course in the future we are going to explore the more advanced tips for let's say using a combination of these indicators to make a trading system, not just to measure the volatility and momentum, but also to spot the best entry and exit points. But today, let's focus mostly on the not on the technical analysis itself, but on the trading features that this platform, TradingView, offers. So that's why I skipped the next one, and let me just recap, combining as a combining exclusive indicators for effective trading. But these advanced indicators are powerful on their own, but they're even more effective when combined. In that case, you see the Keltner channels, the VWAP, Super Trend, and ADX. Or can be combined, of course, to enhance your technical analysis. However, these indicators are highly advanced. It's important to remember not to overcomplicate your chart. Focus on the indicators that work best for your trading style. Too many signals can lead to analysis paralysis, and you know this term. It means you get yourself really busy with the chart, so you can't trade. So choose 2 or 3 of these indicators to integrate into your current strategy and apply them consistently. So let's walk through the TradingView trade window step by step, which is the let's say the core part of our session today. So I'm going to skip all of these indicators and maybe to delete them from my chart. And now, okay, first, when your account is connected to Errante, you can see all your details, account details here, and then you have this trade button here. If I press it, it gets me to trading window. It's like the new order window in MetaTrader 4. It means all the necessary tools you need to open and close or modify your trades are here. First, at the top of this trade window, you will notice tab like market, limit, stop, and stop limit. These are this allow you actually to choose a type of order you want to execute. First, we have the market orders. Market order will execute immediately at the best available price. So this is best used when you need to enter or exit the market right away without worrying about a specific price level. And then you have a limit or orders. A limit order allows you to specify a price at which you are willing to buy or sell. So the order will only execute when the market reaches your set price. And going through this, you can you can set all the prices you want. And it's really important to note that the all let's say sell orders, okay, are filled with bid prices, and the buy orders filled with ask prices. And to appear this to prevent any confusion for your trades, you can go to setting and scale and lines, and then you can get to the bid and ask prices, and yet you can choose both line and value, and then that's it. Magic happens, yeah. And you can see your ask price and bid price here simultaneously. And if I, for example, just migrate to shorter time frame like this, you can see we have it, and we know the difference between the ask price and the bid price called a spread. So it's really important to keep your trading live with those instruments which have a lowest spreads to, you know, it can enhance your trading strategy. It can improve your efficiency, the efficiency of your trading strategy as well, because in that case you don't need to and you can make more money because the cost of your trade going to be less. So this is a market execution limit execution or pending orders limit, stop, and stop limit, which we explained them in our webinars with for other platforms like MetaTrader 4 and 5. And now there's nothing more specific about them here. However, it has a better visualization here, and you can set your price with a distance, and you can set when, for example, you choose buy and then limit orders. So the ticks comes with ask price, and you can see it here. So that will be more convenient for you to set your, when you want, for example, ask minus 18 means the 18 points below your below this price, and then you can set the lot size, and for stop loss and take profit I will explain. So first, a limit order allows you to specify a price at which you are willing to buy or sell, and the order will only execute when the market reaches your set price. And it's really important to keep in mind that limit price is below the current when it comes to buy. You are going to open your position at better price with a limit order, but with a stop order, we are going to open your position at the worst price, but where you can make sure that the market is going to move in the direction you expected based on your analysis. Something, for example, the best let's say description for trading a strategy for limit orders is that the limit orders kind of let's say rebound strategies when you see a very reliable resistance support, very significant support or resistance level, and then you see the market can't bounce off. Okay, it hit the support or resistance and gets back. So that's the way you can open a limit order. And but stop prices for breakout strategies means a stop order becomes a market order once the market hits a specified price, which is worse than the current market price. When, for example, you are going to buy, you set your stop buy price higher than the current market price. So it means you are not going to buy at the better price, but you are going to buy when you are more confident about the market direction to the upside. So it's typically used to trigger entry or exit at a predetermined level, because this is a there's no surprise, because it's a pending order. And also the stop limit order, you know, there's the two. This is a combination of the stop and limit orders. Once the stop price is triggered, it places a limit order instead of a market order. So this gives you more precision in volatile markets. So first you can set your stop price when the market hit it. It doesn't fill your order, or it's not going to it's not going to open any position for you. It's going to open another pending order, which is a limit order. So in that case, if the market hits some level and then bounce back to a lower level, and then you can make sure that you are going to buy at a better price. So you can see here the buy and sell the button clearly displayed the current bid and ask prices. So the price difference between buy and sell is known as the spread, and we know it. And always pay attention to this, especially in volatile markets, as a higher spread can impact your profitability. That's why you need to check the market even at the beginning of your trading day, because in case you are going to uh, get through a very important market event, it means spreads might be widened. So in that case, you really need to keep up with the market to be aware of not going through a very high cost trades. So this is the first thing. And then, of course, the unpredictability nature of the forex trading is that during the market events, the volatility gonna increase. So you have to be prepared for that. So the one very, very important thing when it comes to market execution or any other type of trading, let's say orders, is that you have the ability to set all of your trading plan here in advance. Very simple. For example, you can set the risk. You have your leverage here, your lot size, your P value here, and everything. So if you want to set the risk percentage, and if you stay here, you can see choosing the percent risk will require you to set the stop loss price for further quantity uh, calculation. So it means you can just do your position sizing calculations easily on the chart and through this let's say trade window. So this is where you specify the number of lots you want to trade here on the lot uh, field. A lot in forex typically represents 100k units of the base currency. So, but this can vary based on your broker and market conditions, and of course, across different trading instruments. For instance, trading 0.1 lots means you are trading 100k units of Euro USD, and then you have this percentage risk. So this field allows you to calculate your position size based on the percentage of your account you're willing to risk. So for example, if you set it to 0.5%, TradingView will automatically calculate your lot size based on the risk, considering your account size and stop loss distance. So in that case, you can just set your stop loss distance here as for example, the price, and it's going to set your percent risk here. And of course, you have the choice to change it to your account currency, which is a USD here, and also the percentage of your balance, which means the percentage quantity equivalent in the orders approximate does not include the commission and depends on the actual order execution on the exchange. So you mean it means these numbers are all approximate calculated. It's not the exact number, but it gives you a very great hint to maybe to follow up with the market and your position size. For sure. And the pro tip here, set your risk percentage according to your overall risk management plan. Traders often risk only 1 to 2% of their capital per trade to protect their account from significant losses. So it's really important to keep it just in this range. And then you can also determine your take profit level per hand. It means you can set based on the PEEP, and in that case, you see the machine is going to do all the calculations here for you, your reward, your risk, your trade value. Trade value means the margin you need based on the leverage you are using and the price of the instrument you are going to trade, and also your lot size. So based on the leverage, lot size, price, you see the trade value, which means the margin the required margin for this position. So it means if I'm going to open a 0.18 lots, okay, of Euro USD at this current market price, which is, this is a buy position, so it's going to be 1.08574 or 3, okay, and it's going to be 0.6% of my balance. I have my stop loss just 33 pips away below my entry price, and also I have my take profit 34 pips above my entry price, which means I'm going to use a reward to risk of somehow 0.9 percent, or I can increase it, doesn't matter, to make it a something like that. Is going to be a reward to risk ratio of 1. Okay, and then I can just place my order here. And for this trade, the margin I need is my required margin is $39.09. So this is very, very simple. Yeah. So it's a best practice to always have a stop loss and take profit defined before placing a trade. This is what you have to do. This helps you avoid emotional decision making in volatile markets for sure. And once you've set all your parameters, lots percent risk and take profit and stop loss and etc., you can hit the buy or sell button in here. You can open your position to execute your trade. And so uh, here you can see the clear action that it's going to do. If it was a sell, it's going to be to sell, and when it's buy, it's going to buy. And the next one here you see the DOM. DOM is initials for depth of market tab. And next to order tab at the top, you will see the DOM. But this is supposed to show a real-time order book for the assets you're trading, displaying available bids and asks at different price levels. But here, it's not uh, offered by Errante, so just leave it here alone. Yeah. So that's it, and by this you can open your first trade. So now you know how to use these risk calculations here and to do your position sizing just in this trade window of TradingView. This brings us to the end of today's webinar. Now, excuse me, I lost it. Okay, we explored a range of advanced tips from connecting your account to TradingView, understanding critical pre-trading steps, working with exclusive indicators, and effectively managing your trades through the TradingView platform. I hope you've gained valuable insights into using advanced tools to elevate your trading strategy. Before we wrap up, I want to leave you with one final thought. Simplicity and discipline are your best allies in trading. So keep your strategy clear, use only the indicators that work for you, and always manage your risk carefully. Thank you for attending today's session. If you have any questions, feel free to reach out after the webinar. Thank you so much for staying with me until now. Have a great day and happy trading.